In this video, we're going to talk about the difference between a stock split and a reverse stock split. So what happens when a company undergoes a stock split, or also known as a forward stock split? In a forward stock split, the number of outstanding shares increases. In a reverse stock split, the number of outstanding shares decreases. In a forward stock split, you may see numbers such as 2 for 1 or even 3 for 1. So what does that mean? In a 2 for 1 stock split, that means that as an investor, you will receive 2 shares for every 1 share that you own. Thus, the number of shares go up. In a 3 for 1 stock split, you will receive 3 shares for every 1 share you own. Now, in a reverse stock split, you'll see numbers such as 1 for 4. Notice that the first number is less than the second number in a reverse stock split. So a 1 for 4 reverse stock split means that as an investor, you will receive 1 share for every 4 shares that you own. So the number of shares go down in this type of stock split. Now, the second thing we need to consider is the price of the shares. In a forward stock split, because the number of shares go up, the price of each share goes down. In a reverse stock split, the price of the shares go up. Now, the total value of your investment doesn't change with a forward stock split or a reverse stock split. It remains the same. So in the case of a company, the value of the company's outstanding shares or its market cap doesn't change with a reverse stock split or a forward stock split. So those are some things you want to keep in mind with these two scenarios. So what we're going to do now is we're going to work on some math problems that will help you to see the effect that a forward stock split and a reverse stock split has on the number of shares that an investor may own and also the price of those shares. So let's get rid of this and let's start with this problem. Tina buys 100 shares of stock XYZ at $20. Part A. If a 2 for 1 stock split occurs, how many shares will she own? So we're dealing with a forward stock split. She's going to receive 2 shares for every 1 share that she owns. So the number of shares that she has will be multiplied by 2. So Tina originally had 100 shares. That's going to go up by a factor of 2. So now she's going to own 200 shares. Now the price, the initial price of those shares were $20. So because the number of shares increased by a factor of 2, the share price will decrease by a factor of 2. So you divide it by 2. So the price of the new shares will be $10. Her total investment is 100 shares times 20, which is 2,000. That's before the stock split. And then after the stock split, the value of her investment will remain the same. 200 times 10 is still $2,000. So as we could see, in a forward stock split, the number of shares go up, the stock price goes down, but the value of the investment remains the same. So we've already answered part A and even part B. Part B asks for the new share price, which is $10. So now let's move on to part C and D. If a 1 for 4 reverse stock split occurs when the stock was trading at 20, what will be the new share price? And then part D, how many shares will Tina own in part C? So let's go back to the original situation where she had 100 shares to begin with. So what's going to happen in this 1 for 4 reverse stock split? So what does that mean? That means as an investor, she's going to receive 1 share for every 4 shares that she owns. So in a reverse stock split, we know the number of shares is going to go down. In this case, it's going to go down by a factor of 4. So we're going to divide this by 4. 100 divided by 4 is 25. So after this event, she will own 25 shares of stock XYZ. Now, if the number of shares in a reverse stock split goes down, we know that the price is going to go up. So her initial price that she bought the shares for was $20. And since the number of shares went down by a factor of 4, the stock price is going to go up by a factor of 4. So it's going to go from $20 to $80. Now her initial investment is still $2,000. And then after the reverse stock split, her investment will be 25 times 80, which is also $2,000. So as you can see, in a forward stock split and in a reverse stock split, the value of the investment doesn't change. But in a forward stock split, the number of shares increases while the price decreases. In a reverse stock split, we can see the opposite is true. The number of shares decreases, but the price increases proportionally. Now let's work on another similar problem, but from a company's perspective as opposed to an individual investor's perspective. And feel free to pause the video if you want to try this problem. Number 2, company ABC has 15 million shares outstanding that are trading at a price of $30. Part A, what is the market capitalization of the company? The market capitalization is equal to the number of shares times the price at which the shares are trading at. So the market cap, which I'm going to abbreviate it as MC, that's going to be the 15 million shares that are being traded, capital N, which stands for million, times the price of each share, which is $30. So 30 times 15 is 450. So the market cap of this company is 450 million. Now part B, if the company undergoes a 3-for-1 stock split, what will be the new share price? And at the same time, let's answer part C. What will be the number of shares outstanding? Personally, I like to focus on the number of shares first. In a 3-for-1 forward stock split, what's going to happen to the number of shares? Will it go up or will it go down? Well, we know that there's going to be made available 3 shares for every 1 share that is currently being traded. So the number of shares is going to go up by a factor of 3. 15 times 3 is 45. So after this 3-for-1 forward stock split, the company is going to have 45 million shares available for trading. Now, what's going to be the new share price? Well, we know that if the number of shares increases, then the share price is going to decrease by the same factor. The share price was initially $30, and so if the number of shares increased by a factor of 3, the share price will decrease by a factor of 3. 30 divided by 3 is 10. And now part D, calculate the market capitalization of the company. So initially it was 15 times 30, which is 450. And then after the stock split, it's going to be 45 times 10, which is also 450. So as we can see in this forward stock split, the market capitalization remained the same. The number of shares increased by a factor of 3, but the stock price decreased by a factor of 3. Now you might be wondering, why would a company undergo a forward stock split? Well, let's say we have a company that is currently trading at $50 and the company experiences a very strong bull market and the price of the stock skyrockets to, let's say, $600. Now many investors will feel uncomfortable buying a stock that may be highly priced at 600 or 1,000 or even more. And so what a company may do to make their stock more appealing to investors is they may undergo a forward stock split. Let's say in this case, if they were to undergo a 3-for-1 stock split, the value of the stock will now be $200. The price will decrease by a factor of 3. And this price is more attractive to investors compared to paying $600 for a share. And so that's one of the reasons why a company may undergo a forward stock split, is if the value of the shares has risen a lot, to make it more appealing to investors, they would undergo this stock split to decrease the price. And so more investors will be willing to buy the stock at this price, which will allow the price to continue to go up. Now, in the case of a reverse split, a company may choose to use that option to increase the price of their shares. Let's say if a company was trading at $50 and they had a bad year and the price of their stock has dropped to, let's say, 50 cents. In this case, the company is at risk of being delisted by the stock exchange in which their shares are being traded in. Some stock exchanges, like the popular ones, in order to trade in those stock exchange, the share price have to be $1 or more. So if it falls below $1, they may risk being delisted. And the company may not want to be delisted. So in order to prevent that from happening, they may undergo a reverse stock split. If they undergo, let's say, a 20-for-1 reverse stock split, the price will, a 1-for-20 reverse stock split, the price of the stock will increase by a factor of 20, and so it will now be $10. And thus they can avoid being delisted by the stock exchange in which their shares are being traded at. So that's why a company will undergo a reverse stock split, is to avoid being delisted if their share price falls below a certain minimum.